The 6-member Monetary Policy Committee will deliver its verdict on the latest interest rate decision on Wednesday. Now, there are times it's an open and shut case. This time, it's not exactly that. So, we've had economists who've told us that the RBI will indeed cut rates, but we've also had economists who've told us that the RBI will go for no rate cut this time around. So, let's divide it in the middle and try and see what justifies both of those individual decisions, whichever way it actually goes. On the rate cut front, remember, the retail inflation number is now down to 3.4%. That's the headline number. That's well below the RBI's target of 5% for March 2017. So the RBI can easily justify a rate cut based on that headline number. Then, of course, there's a fiscal deficit number. Remember, this is the policy right after the budget. So it's almost a verdict of sort on the fiscal consolidation roadmap of the government. The government has said that the fiscal deficit will be maintained at 3.2%. That should satisfy the RBI. There's been no large stimulus measures. Expenditure is under control, at least on paper. So the RBI should be happy with that as well. Finally, the third argument being made here is that later down this year, you may not have room to cut rates. US Federal Reserve is likely to hike rates. Commodity prices have started to rise. So the window to cut rates may actually close. So use this window to cut interest rates now and perhaps end the cycle, which has now gone from 8% rates in 2015 to 6.25% at the current juncture. There are those who are saying that the RBI will choose to wait. Why are they saying this? Well, one reason is the high core inflation. While headline inflation has fallen, core inflation is at around 4.8, 4.9%. So that is still above the RBI's comfort level. They also argue that the RBI now has to keep its next target in mind, which is 4% headline inflation. So they need to start moving towards that and try and pull back on easy monetary policy or extra accommodative monetary policy. They also argue that liquidity is very easy. Remember that demonetization has led to a flood of deposits in the banking system. So monetary policy from a liquidity standpoint is easy. The RBI may not need to do more in terms of interest rate cuts. And finally, linked to this, they argue that bank rate cuts have been announced just in January. So let those actually play through the system and then see whether you need to provide more of a support to economic growth or not. Those are the two arguments. The decision will be announced at 2:30 on Wednesday. You can watch it live on BloombergQuint.com and read all the news and analysis on the website.